Thanks, Tim. Uh, Great to be with you today. I have to say that last 12 months in the natural gas business in general and the LNG business in particular has been nothing short of surprising. Um, when we founded Tellurian, Martin and I, we were acutely conscious of the fact that with LNG becoming significant, significantly larger and more liquid, a different business model would have to be developed. Fundamentally, you're moving into a real commodity business. And in a commodity business, you want to be in the top quartile in terms of your cost structure. Fortunately, the United States has ample gas resources that can be developed very cheaply. And we know how to build the infrastructure more efficiently than any other country in the world. But the idea of indexing prices for long-term contracts on whatever index you want to choose, whether it is Brent-based as traditionally had been the case, or on Henry Hub as we did at Cheniere, did not seem to hold much promise because in a commodity business, you don't have to enter in those kinds of contracts. So we focused first on making sure that we could build the liquefaction facility close to resources that were attractive at a very attractive price, and that was a Driftwood project. And then we watched to see how the market was going to continue to evolve. You don't go from a point-to-point market to a commodity business overnight. It takes some time. It is easier in Europe because TTF is a true index which has some leg to it, and JKM has to develop into a true commodity business and a true local index in Asia. And that is happening as we're watching it. COVID basically put everybody on pause for a year, but in spite of that, the LNG business continued to grow, mostly driven by Asia. But some new developments became very important. First, Europe became a very important swing buyer because they have the storage capacity. They have a very high delta between summer consumption and winter consumption, and therefore they can use their storage efficiently in order to help balance the markets on a global basis. That was critical. And it worked out pretty well in the summer of 2020 when storage in Europe got filled, thank God, because the winter of 2021 would have been even worse had Europe not had the storage. In the last few months, the most important development is the fact that carbon prices have increased dramatically in Europe, which basically puts a floor on gas prices in Europe. Carbon price plus the cost of coal. Roughly today, $8 an MMBTU, so a net back to the Gulf Coast of better than $7. That has solidified our business model of being integrated to control your cost every step of the way. And with the Haynesville, we have a world-class resource. With Driftwood, we have a very competitive price for building the liquefaction. And the business model that we suspected would develop is that different markets would want to use their local indices in order to mitigate their risk. And today, that makes a ton of sense. So you can sell gas today in Europe at TTF or TTF-based price, and in Asia at a JKM-based price, and have a net back to the Gulf Coast of $7 to $7.5, comfortable in the fact that carbon prices on a global basis are going to support those prices for a long time to come. At the same time, because of the difficulty of adapting to a new business model, you have a scarcity of attractive projects coming on stream over the next 5 or 6 years. So the market is going to continue to be tight on a global basis. So today, gas is very competitive with coal and forces coal to be very marginal. And at the same time, alternatives to natural gas for the electrification that is happening around the world don't exist. Wind power and solar power is very, very small in the overall scheme of things. And a solution like nuclear will take a long time to develop. So that sets the stage for where we are today. So we expect that the arbitrage between American prices and global prices will help get to a very quick resolution on commercial agreements. With this, Ryan, I'll send it back to you for questions and for comments.
Great. That's a great introduction. And just as a reminder for people listening or watching, if you have any questions, feel free to email myself, ryan.levine@Citi, or Tim at his email. I'd be happy to ask on your behalf. Maybe just to start from a high level, you highlighted the floor on carbon prices in Europe. Curious, how you view LNG from a global decarbonization perspective, or what its role will be in decarbonizing the broader energy markets.
Well, everything I've heard about decarbonization at the moment is aspirational, but not based in facts or reality. So as you see electrification on a global basis continuing to increase, first with increased use of the internet, with trying to limit natural gas or other sources of energy and replace them with electricity for home heating, for industrial purposes, and in particular for EVs on a global basis. It is going to put a huge demand on electricity, and there is nothing that I see at the moment that can fill that bill. So we have a huge demand for energy that is increasing. The EIA estimates a 2% growth of energy consumption on a global basis, but of that, OECD countries will remain flat, and all the growth will come from non-OECD countries, roughly 4%. The energy mix will change also because people want to go increasingly to electricity. On that basis, coal is taboo. Nuclear has not reached a level where it can be commercialized yet. It's very expensive, and it's politically very difficult to get it accepted. Windmills and solar panels are not going to meet that kind of demand. So I think carbonization in terms of aspiration is fine, but if we don't get realistic with what it is that we can do, we're not going to get anywhere. If you offer somebody in a developing world a choice between expensive whatever and cheap coal, they will choose cheap coal today. So we, the Western world, have to offer affordable energy to the developing world, and we're not doing that at the moment. The best thing we can do is to use the natural gas that we have in order to allow growth on a global basis and do the best we can to mitigate the carbon footprint. So natural gas in general will be very important during the transition period. And if the incentives are put as is happening in Europe now, where you have a price on carbon of $60 a ton, you will have incentives to try to do the right thing at the same time as you're trying to provide cheap energy on a global basis. So the role of gas and LNG is extremely important for the next few decades.
Great. Getting some question over email. What is the update on reaching FID at Driftwood?
There's no change. We'll start construction this summer, and we expect to give notice to proceed to Bechtel in the first quarter of next year.
Okay. So you had highlighted global demand coming mostly from non-OECD countries. Geographically, is there a certain region of the world where you see a lot of upside to incremental global LNG demand? as we emerge from a post-COVID world?
Pretty much everywhere. I mean, starting with South America, because Argentina and Brazil are asking for more LNG. Going to Europe, because it's going to be a choice between Nord Stream 2 and LNG in general, but mostly American LNG, to fill the gaps, especially if Germany and Poland get away from coal and lignite. And then, of course, in Asia, where demand in India and China has increased by double digit last year in spite of COVID. So there is a global structural short on natural gas, and you can fill it with a little bit with pipeline, but mostly with LNG. So it's going to come from pretty much everywhere.
Okay. Tim, do you have a question?
Tim, you're on mute.
Tim, are you there? I think he's still on mute.
Can you guys hear me?
Yeah, now we can hear you. Yes.
Thank you. Sorry about that. Sharif, I was saying, obviously you guys have a pretty good view of what's going on globally. Just curious what your take is on some of these incremental LNG additions, specifically Qatar and Mozambique, and how is that going to affect the competitiveness, I guess, of the U.S., or does that even matter?
Well, I have to tell you, I've never understood Mozambique because the numbers did not make any sense. But now with the political situation, I think that one has been put on the sidelines for a while. In terms of Qatar, I think they have a lot of steps to go through before they're ready for FID or before they're ready for starting construction. I think you can make a final investment decision anytime you want. But at the end of the day, Qatar will have a number of issues to go through. And I hope they do it fast because their gas is going to be desperately needed. They have to figure out who's going to build for them. It's a very, very large project. Very few contractors have the ability to guarantee such a project. They have to figure out who are going to be their partners. They have to figure out where their offtake is going to go. And like everybody else in this business, they have to come up with a pricing mechanism that is adapted to where we are today, not where we were 10 years ago.
Thank you.
So I think 70% of the LNG in the future will come from three places: Qatar, the US, and Russia. So it's very important that all three places continue to develop their resources to meet the demand.
Great. We're getting another question over email here. As a large shareholder, investors asking how focused you on near-term share price versus longer-term outlook for the business, or where your priorities lie?
Well, anybody who knows me knows that I'm always focused on the long term, and I don't really care much about what happens in the short term. I mean, things will balance. Sometimes the stock will behave well and you're able to raise money on attractive terms. Sometimes it's not so good. At the end of the day, you have a goal. And our goal has always been to be able to deliver $6 to $7 of cash flow per share when the project are up and running. And there's nothing at the moment in what we've done so far that would indicate that that is not going to be achievable. So especially with the fundamentals being as strong as they are today. So as a large shareholder, I'm not terribly concerned about what happens tomorrow. I'm concerned about continuing to put the business model in place, finish the commercial agreements that we're working on. We're going to be sold out, I have no doubt. And on that, and because we're picking a pricing structure that fits today's model, we're going to price on TTF and on JKM. And on that basis, the market is extremely receptive to that kind of that kind of approach. And in order to make sure that we don't incur disproportionate risk, we want to be completely integrated on our resource and be able to deliver the gas on the water at $1.70. The arbitrage is obvious. If you can deliver on a variable basis your gas at $1.70 and the market is paying you $7, the only question is how long will the market pay you $7 for? And because of what's happening to carbon prices, it's going to be for a long time.
Yeah, that's a great segue. So getting, I think 4 or 5 people are asking the same thing around the $1.70 gas price, around your, what you're seeing in the upstream market. What's the latest around acquisition strategy for Haynesville gas and procuring a reliable gas supply for potential off-takers?
I think if you take the 3 public companies in the Haynesville, small, medium, and large, talking about Goodrich, Vine, and Comstock, they're all in the same neighborhoods in terms of their variable cost of construction, of production, roughly $1 an MMBTU, between gathering, processing, taxes, so on and so forth. They're all in the same ballpark in terms of their production per foot and their cost per foot of drilling. So they're all within 10 cents of each other in terms of what their numbers look like. So if you have a variable cost of production in the field at $1 and 10 cents to get it to the plant and 60 cents to liquefy it, and for the 60 cents, I refer to Shitty Energy. Look at their operating costs. We now have models for everything and public companies for everything, so we don't have to guess anymore. The numbers are public. That's why I get my $1.75. My drilling budget is entirely discretionary. If I like the price, I drill. If I don't like the price, I don't drill. So those are the margins we're talking about. So I think Comstock, Vine, and Goodrich are very, very good metrics in terms of being able to compare. You all know there's a dozen companies out there that are producing today in the Haynesville, all within a few inches of each other in terms of performance. So it is not very hard. And when instead of getting $3 an MMBTU at Henry Hub, you're getting 7.5 on the water. The 10 cents difference between one company and the other doesn't make much of a difference.
Okay.
So in terms of what we find them, before we do find them, we want to finish our commercial agreements, which will happen in the next few weeks. And when we do that, we will be able to announce them and then go to the next step, which is start worrying about which of the companies we're going to make deals with on the upstream side. But the universe of upstream is well defined. We know what it is, and we understand what the metrics are.
That's helpful. Tim, did you have something? Oh, we've had several. Oh, go ahead.
Just curious, just switching gears for a second, if you had any thoughts on the tightness in the current LNG shipping market?
No, I mean, it's a commodity business. If you need ships, you will go get them. There's 600 or 700 ships today in circulation. Some of them probably need to be retired, and if the market is tight, they won't be retired that quickly. But then it takes 3 years to build a new ship. So based on the fact that the market is now tight, people are looking, it's justified to start building new ships, and that will not be an issue. I think the shipping market is always caught up. At worst, they're in out of balance for 6 months to a year. But that is never been a major concern.
Thank you.
And maybe we had several panels over the last 2 days around advantages of Louisiana and the carbon sequestration market. Curious, we've seen some of the other LNG development projects starting to talk about CCS to offer a more attractive carbon product to customers for contracting. Curious your thoughts on that, or if that's something that Tellurian would would look to invest more in?
Well, we have several efforts going now to look at potential first improvement in our own designs at the plant itself to limit our carbon footprint. It is going to be, when we're fully operational, 8 million tons. So we're looking at what are the things that we can do from an engineering standpoint to reduce that footprint. The second thing is, as you mentioned, we're in a very good location for carbon sequestration. But we have to look at, and we've started looking at different places where we can do the sequestration. It's a complicated process. I will refer you to Exxon's announcement of $100 billion for 100 million tons. Now, to put it in perspective, we emit 5 billion tons in this country. So for $100 billion, Exxon is proposing to do 2%, and it's going to take them a decade, and they want incentives from the government in terms of justifying an investment like this. And it's not different from for anybody else. So we have to put the right incentives in place in order to do that. You probably know, maybe you don't, but I've been an advocate of a carbon tax for a long time because I think climate change is real. And if there is a carbon tax or some kind of cap and trade as there is in Europe, we will get to a point where we are incentivized for doing the right thing. So we have an effort going on carbon sequestration simply because in Louisiana, it's feasible. And then we're looking at at nature-based solutions as well, because if you plant trees, then you're going to recapture some of the carbon you're emitting. The notion of saying that our LNG is going to be carbon-free is kind of silly. It's never going to be carbon-free. It has carbon in it. But we can say, hopefully one day, that our footprint at Tellurian is neutral. And this is what we're trying to achieve.
Interesting. I mean, when you talk to customers, is this something that's being diligenced around your project, or is this very low on the priority list of things that people care about?
Extremely low on the priority list. The first thing is affordable energy. The second thing is reliable energy. The third thing is deal with pollution. Distance force is climate change.
Appreciate that. I guess, and we had met with some other folks in the LNG industry, and they were talking about destination-based pricing and other changes to the contract structure as the world is adapting. You know, curious if you're seeing any design changes in what's being proposed or discussed around contract features or attributes.
From that standpoint, our model has not changed. If you're one of our partners and you're picking up gas from us, you come and pick it up on the water outside of the plant in the Gulf of Mexico. You take it wherever you want. You do whatever you want with it, and you pay us a price based on the price in your market, TTF or JKM, as the case may be, minus transportation. Very, very, very simple. And I think that is, I mean, I've been advocating this for a long time, but the markets were not there to support it. TTF is now deep enough to support it. You can actually hedge yourself for a few years. And JKM is fast getting there as the market gets deeper and deeper. So we think those developments were still very, very embryonic 5 years ago. It is becoming a lot more prevalent now.
Okay. Getting a few more questions to clarify some of your earlier comments around commercial agreement targets and FID targets. I think you answered that, but I mean, should we look to the extent that you make a decision or agreements are in hand? You know, should we look for to be announced immediately? Is there any, you know, strategy to how you would communicate that?
Again, Ron, anybody who knows me knows that I'm extremely transparent. Anytime we have something to announce, we will announce it. We have very few secrets from people. We're just, but right now the fundamentals support everything that we've been wanting to do. So expect that we will have announcement to make pretty quickly.
Okay. And one that's been coming, another topic that's been in focus the last several days is inflation and increasing steel costs and other input costs. Given the components of building trains, how's the Bechtel contract structured, and how do you see rising steel costs impacting the outlook for Tellurian in the U.S. LNG market?
It's not going to be significant. This will be the A train, the third project that we're building. We've gone all our projects on time, on budget. It's not going to be different with the same companies, Baker Hughes and Bechtel, and we're very, very comfortable. The contract is rock solid, and the flexibility based on commodity prices is not going to have a significant impact on the project. And
does the EPC company bear that, or is that customers, or how's that structured?
We're getting into things that we don't really talk about, but at the end of the day, there is a contingency. Some of it will be part of the contingency. Some of it will be borne by us, but it's literally less than 5% on a $17 billion project. So it's not going to be very significant.
Okay.
I'll just put in here real quick. Sherif, obviously, you made it pretty clear that you have a longer-term vision as you look at these things. Where do you see Tellurian 5 years from now? If you had to say, okay, this is what the company's going to look like 5 years from now.
Nothing different than what I've told you. I expect $7 cash flow per share. You will decide what the multiple is.
There you go.
And then in terms
but
of...
I will tell you one thing. By being integrated, we'll have a lot less debt on our books than we did at Cheniere. Because we'll have the production while we're building, offsetting some of the cash flow. So there's a lot of expenses we won't have this time. Interest during construction, so on and so forth.
Maybe just in terms of the global LNG marketplace, we've seen some new entries come in with some smaller scale projects and offshore gas utilization for LNG and some other ideas being floated out there. Curious, if there's any interest in expanding the Tellurian business model beyond U.S. dedicated LNG export more broadly over time, or if you view it as a Gulf Coast LNG company.
Look, for the next 6 or 7 months, the focus is entirely on Driftwood and our domestic project. Okay, but once we've launched, we're going to see, we'll see what happens. But anything that I see around the world today is minuscule compared to the 3 countries I told you about. Russia, we're never going to be invited there. Qatar, I don't think we're going to be invited there either. So we're focused on the U.S., and those are the things that matter. We're doing 27 million tons. I'm not terribly anxious to go chase a 2 million ton project somewhere. But if we, and we know the market extremely well here. We understand how you build here. We've done it repeatedly. A lot of my team from Cheniere and some of Martin's team from BG have come with us. So we're tested. We've done this before. We stay in our comfort zone. So will we look at other things? Yes, because it is a market in flux. there is a tremendous amount of dislocation on the global market. We happen to be in a position where we can secure low-cost natural gas and deliver it on the global markets, and both of these things are very attractive. So will we look again? Yes, of course, but next year. This year we'll focus on only one thing.
Okay. In terms of, we touched briefly on the cost structure side. From an operations standpoint, is there, obviously when COVID hit, there was some actions taken to reduce costs within Tellurian. To the extent that we see a positive outcome through this FID process, or you reach FID in the near future, is there a natural ramping up of some of the infrastructure to run Tellurian as the business grows?
Of course, because this is a process that ultimately is going to result in a $17 billion construction project. So you're not going to do it on a shoestring. But because of our business model, we are also increasing our footprint in terms of production. And we will have cash flow as we do this. So you know that in the last 9 months to 10 months, we paid off all of our debt. We completely sanitized the company. We have the ability now to continue to do what we're doing. We started drilling again because at $3 domestic pricing, the returns in the Haynesville are very attractive. We can get our money back from drilling in less than a year. I expect the market to continue to stay somewhat tight through the summer because we haven't drilled enough. And because also LNG is surprising everybody with its resilience through the summer. Last summer, we had a drop in production in the United States. We're not going to get that this summer. So there's 11 BCF a day that is going to continue to be produced to be exported. The demand in Mexico is very resilient and it's saying over 6 BCF a day. So the U.S. is now exporting 16 to 17 BCF a day. It's also importing 4 BCF from Canada. So, but these numbers are very strong and make the fundamentals, even in the U.S., very strong. So that will continue. We'll continue to drill. We'll make some acquisition. And we'll have very significant cash flow to make sure that we can meet all the eventualities. So the next 7 months are going to be fascinating. Stay tuned.
Maybe in terms of overall contracting activity, clearly we're working on Zoom right now. As you talk to customers or potential customers around the world, do you get a sense that people are waiting for in person or to emerge from a COVID environment before making big decisions?
Absolutely not. Absolutely not. We'll probably sell 12 to 15 million tons of capacity over the next few weeks entirely on Zoom.
And particularly within some of the countries that are counterparties, is it, I imagine there's other parties within some of these organizations. Are you seeing any change there in recent months or weeks?
Well, different people react to different business propositions. So, and different people react at a different pace. But the offering that we have in the market now, because we are integrated, we can make that offering, is based on their local pricing. So it's very safe for them. They understand exactly what their exposure is, and they can buy the gas very, very easily. This is not a complicated contract. But I say that at the end of the day, you have to mind your T's and make sure that everything is right, because you're going to live for a long time with these contracts. You don't want to make mistakes. So it's going to take physical work to get it done. But the concept of the contract, you pay me your market price minus transportation, and you pick it up. You go get the boat. If Tellurian wanted to be able to do the entire capacity by itself, it would need to take something like 70 ships. That's not in the cards for us. So we take the shipping risk off by having these contracts. They're very attractive to the counterparties because they're very low risk for them. And they keep all the flexibility of optimizing their volumes and taking them to higher pricing, high price environments. So it's a very attractive product. And it's at the same time extremely simple. So we can do that without having meetings in person. The advantage that Martin, Octavio, and I have is that we know everybody in this business. So we don't really have to get to know people and to go and dine them and wine them. We've done all this in our careers.
So getting a few questions, obviously COVID situation in India is making a lot of headlines recently. Curious how you think the longer term demand outlook for India is for gas, for LNG, and how you see that unfolding.
Well, Secretary Kerry was in India a few weeks ago to talk to them about all this. And the bottom line is Modi told them it's coal or it's gas. We can talk about renewable if you want to, but that's not going to be incidental. That's going to be very, very small. So it's coal or it's gas. If America is willing to let us have the gas, we have plenty from Qatar. We don't want more. Russia is too far for us. So if American gas is available and reasonable, we will buy American gas. And if not, we'll go to coal. So it's that simple. Now, the limitation on this for them is pollution. Because in certain cities in India today, you cannot breathe. And it has a health consequence. So India is investing $60 to $100 billion in their gas distribution infrastructure within India in order to be able to accommodate more gas. They have indicated that they want gas to be somewhere between 15 and 25% of their energy mix. There's nothing that has changed.
Okay. Well, I think we're running towards the end of our allotted time here. Wanted to thank Sharif for taking time to talk with us, and insightful as always. Sharif, I didn't know if you had any closing comments or remarks.
I just want to thank Citibank for the research that you put out a week ago, which basically nailed it. What is happening in terms of supply-demand situation on the global gas business, combined with carbon pricing starting finally to be real. Carbon prices in Europe were up 140% last year. That changes everything, and you guys nailed it. So congratulations.
Yeah. Well, thank you for the insight, and I think that's the end of the session. So appreciate it.
Thank you.
Thank you.